Have you noticed Western Digital stock just dropped nearly 7% in a single day? Is this the beginning of a bigger crash? Or is this the buying opportunity investors have been waiting for? Let's break down the fundamentals, technical chart, analyst targets, and whether WDC is still a buy. WDC closed around $519.80, falling almost 7% in one trading session. A move this large naturally raises one question. Should investors panic or prepare to buy the dip? Let's look at the reasons behind the sell-off. Why did WDC fall? Several factors likely contributed. Profit taking after an incredible rally. Weakness across semiconductor and AI, hardware stocks. Investors becoming cautious ahead of future earnings and guidance. This doesn't necessarily mean the company's business is weakening. Sometimes strong stocks simply pull back after huge gains. Now let's check the fundamentals. Revenue stands at approximately $9.5 billion. Net income is around $1.75 billion. EPS is $18.66. The PE ratio is about 33, which many investors consider reasonable for a growth-focused technology company. Overall, Western Digital remains profitable with strong exposure to AI, cloud storage, and enterprise SSD demand. Looking at the chart, the most important support zone is around $500. If buyers defend this level, WDC could rebound toward $570 to $600. However, if the stock breaks below $500 with heavy selling volume, the next major support could be near $450. Patience is important here. Analysts remain optimistic. Average price target $643. Highest target $1,050. Lowest target $450. That means Wall Street still expects meaningful upside over the next year, although opinions vary. For long-term investors, gradually accumulating shares during weakness may be a smart strategy instead of investing all at once. 4. Short-term traders. Waiting for confirmation that the $500 support holds could reduce risk. Risk management is always more important than trying to catch the exact bottom. So, is WDC crashing? Not necessarily. The company remains fundamentally strong, but the stock is experiencing normal volatility after a powerful rally. If support holds, this pullback could become an attractive long-term buying opportunity. But if support fails, investors should be prepared for more downside before the next recovery begins. What do you think? Will WDC recover and move toward $643 or even $1,050? Or do you think the stock is heading toward $450 first? Let me know your prediction in the comments. If you enjoyed this analysis, don't forget to like, subscribe, and turn on notifications for more stock market updates.